Welcome to my daily review. Today is Tuesday, May 13th. You're looking at a daily chart of the Nasdaq, which had another good day today, up 301 points or 1.61%, closing above 19,000 here, 19,010 with 15% above the average 50-day volume here. So we've seen some volume coming in recently on the upside on this V-shaped recovery that we have going on. I had mentioned earlier about this 27% correction, and I believe this is the three waves down theory, right? Everybody wants to say it's two waves, but I had always said this was three waves. And then we had that, the April 7th low, what is it, after the Liberation Day or whatever. And then you had a rally up, and then, some non-believers are just taking profits. And ever since then, it's been pretty much straight up with just a couple of little digestion days here. But this week here on Monday and Tuesday, we've seen some real strong motions here, movement above the 200. Yesterday, it closed 2.1% above the 200. Today, 3.7% above the 200, 9.4% above this downtrending 50. And you could see the the 10 EMA and the 21 going through the 50, which is always a good indicator. And then with the Nasdaq now trading through the 200, this is all systems go. One level that I was concerned about was the not only the 200, but the 18,281 just completely blew right through there. Well, like I said, went above 19,000. Now your next level would be 20,110, which is not that far away the way this thing's going, right? Another, 1,100 points or 1,000 points, whatever. But when you're doing 300 a day, you can get there in a hurry. Yesterday it was up 779 points, and I had said that I expected, the Nasdaq to have a strong opening because of the hammer candle that we saw yesterday, where it closed just 2 points off the highs. And today it followed through with another, essentially a follow-through day. So a little strong action here. And it's very reminiscent of what we saw back in 2018 and 2019. And I like to do precedent analysis because what happens in the stock market, it happens over and over again. Whatever's happened in the past will happen again. We saw this was a 24% correction. The prior one that I showed you from December 16th to April 7th was a 27% correction. But clearly you had three waves down on this one as well. And the third leg was a nice washout with the volume here. You could see this heavy volume as it washed out on December 24th. And we got the Christmas gift and it rallied back up in the V shape. And I think that's what we're getting here. I mean, it looks pretty obvious that we're getting a V-shaped recovery here. And the same players are at play here, Trump with tariffs and China trade war and Powell, unwilling to, mess with the interest rates. It's the same scenario, very similar to what happened in 2018, 2019. And so it did on this occasion, the 8,133 down to 6,190. That's what I said is a 24% correction. And it came back and made a higher high before correcting of 8,176, which is above 8,133, unless my math is off. So I would expect it to do the same thing, get above the 20,000, what was it, 204? Whatever it is, 20,000 to, yeah, 204. Yeah. So I would expect it to get above that level before, making a correction back to the 50. But it's all systems go. We're on green. It's go time. And I don't really even want to look at any other indexes because the Nasdaq is where, my stocks that I trade are the growth stocks mostly are involved. The SPY has the, 500, larger cap names, but and it's doing well. Also, you could see the 10 and the 21 has gone through the 50 and it's trading above. It's 200 now. So the 200 is in the rear view mirror, folks. Yeah, yesterday it was 1.7%, now 2.3%. This is up only 0.66%, while the Nasdaq was up. What did I say? It was 1.6. Okay. Enough of that. Okay, we trade stocks here, and I gotta say, We went through a real rough patch here. After the election, people are excited about the new administration. It's going to be, business friendly, and it went kind of sideways for a while. Then it turned out to be not so business friendly, and it kind of shocked the market. So we had the three waves down, and then the Liberation Day, and everybody knows the story. But I just got to say that we suffered through a lot, 27% correction, and now we're making big money on the way up. We're identifying leaders, we're in the leading stocks. So just be humble, you've done the homework. Steve Jobs said, what was it? Stay hungry, stay foolish, and he should have added stay humble because, I see a lot of people on Twitter bragging about their winnings, we were light on the market when we should be, and now we're heavy, and that's the way you play, the downtrends and the uptrends. I'm just saying, just be humble. That's all, I guess. That's all I want to say. Anyway, I'm just going to go through some of the earnings plays from last night and this morning before I get to our stocks on our, ready list and my focus list. I kind of screwed things up. ASTS had kind of a, kind of a wild reaction to earnings. I was watching this one this morning. It spiked higher, and I thought, man, this thing's really going to rip. But then, nope, it just came back to where it was, prior to the earnings. So not a big move there. Rigatoni, just a washout here, a sellout, 15%, down to the 21. Not the end of the world, just not what you want to see. I think their sales was like, what was it? 101, what was their sales? It was 1.5 million. Gosh, what was it? It was something pathetic. It was like 100. Come on, Marty. Anyway, it doesn't matter. It was almost like a typo, like 140,000 or something. Just really anemic sales. There's no way I could buy anything like that. All right, so that's enough of that nonsense. Let's get to some serious stocks here. This is SE. This is one that I was going to put on my ready list, but I had it on the focus list. I didn't want to buy in earnings, and so now give you a chance today. And this is, yeah, you got to pay more. It spiked higher. And it's got that 147.73 buy point. And so if you didn't get it here as it pulled back because you didn't want to buy into earnings, now you pay more. And I just consider that like insurance. It did pull back here. If you look this morning, it had this one little tick back to the 147, and that was your chance. You have to be really quick to see that one here as it pulled back to that buy point just for like a 5-minute stretch before it took off again. Yeah, 147.26. So it pulled back to that buy point and ripped higher. So if you're quick, you got the buy point. But I just, and if you want to own the stock, just wait till the data point comes in and then just pay more and just consider it like insurance. Because it could go the other way. We've seen plenty of stocks sell off, but SE, nice report and a nice move. ONON on holdings, spiking nicely on its earnings reports. Obviously, the tariffs have a big deal to do with these footwear companies, and we've seen, pin action from the tariff news, with Crocs and with Deckers doing well here since, but not certainly not like ONON, which is now, the leader of that shoe group. All right, and LOAR, this is a defense stock. Nice report, nothing wrong with the report. And they raised guidance. It just, it's ran up into the print and now pulled back. But to me, this is like we've seen a lot of these moves here recently. I want to point out Monday because Monday is one that was on my focus list and kind of did something similar yesterday after a strong earnings report. Monday, kind of had, a flat day yesterday, 93 cents it was up. But then, buyers come in. So institutions don't buy all at once. They wait for data points too. They say, well, we'll nibble a little. We like that report. We're not going to buy it Monday, but maybe we'll buy it tomorrow. Maybe they'll buy it next week or next month. But yeah, institutions don't buy all at once. This one does have quite a few institutions in here, the strong growth funds here, the Lord Abbott and Fidelity and, T. Rowe, some highly respected growth fund managers there buying Monday. Anyway, I digress. Why did I get there? Oh, I know, because I'm going to show you, I'm going to show you the stocks that are on my ready list and my focus list so you can decide if you want to if you want to buy a focus list stock instead of a ready list. Because I'm not going to post, 25, 30 stocks. I posted like 10 this morning, and that was a lot because people get confused. They don't know what to buy, and it makes it harder for them. This is JD reported today, China retail internet stock. It was, in this nice cup with handle. If we take a look at the weekly, but sold off recently, kind of like everything else. And up 10% this week, up 3.3% today. Nice move following its earnings report. CYBR. This is a um, cybersecurity stock, once again, pretty strong report, but a wonky reaction. I would watch this. This is definitely going to be on my ready list here at that 359.54 level. Like I said, we've seen some really silly, earnings reactions, and I think we can take advantage of these, as I don't know if you want to call it a delayed reaction or whatever, but yeah, sometimes they have a delayed reaction and they don't rally like Robinhood, which reported like 2 weeks ago and it just didn't do anything right in here. You can't even tell which day it reported. Now all of a sudden, Robinhood, King Kong off to the races. That's one that I like. Anyway. I digress. And what was the other one? Oh, CAMT reported this morning. This is an old darling, huge winner in 2024. Look at this, 23 and 24 during that big bull market. But, it's kind of fallen on what you'd call like a stage 4 decline here. So, yeah, not much of a reaction to earnings. Anyway, this is one of those, 3 million market cap, and it's got, I don't know, it's not an expensive stock. These are not expensive stocks, but they just are not awarded, high multiples. Anyway, I'm going to move on because I want to get to something that I really want to get to. And that is my ready list at MC Stock Charts. I'm making these videos private now for just for MC Stock Charts. So this is just for the people who subscribe to my website. Those other videos will be released kind of later, so you guys get the first of this. But anyway, I put HIMS. I kept HIMS on, and I've got to move here now that we're getting to leading stocks. I've got to move the exponential moving average to the 5 because in a strong uptrend like we are now, strong stocks will ride the 5, and you could see that's what him and hers is doing. So I left this on the ready list this morning, and I had a couple people. Jimmy said, "Man, this thing looks extended. I don't. I think I think it's due for a pullback, or they want to see a pullback." I said, "Man, when you're in a strong market and you have a leading stock, and this is squeezing since the earnings report, this is short squeezing. So you kind of want to ride your winners, right? And I want people in this stock, and so that's why I left it on, and I'm going to leave it on too." Because I want people in this stock. And even if it does pull back, even if it pulls back below the 5, I mean, look at how much this thing's moving each day. If you just look at that 5 a couple days ago, it was 48.81. And then on Monday, it's 50.95. Today it's 55, going up $5 a day. So you can see how sharply this line is moving. And I know people, are expecting a pullback, but when you get a short squeeze here, and you can see all the big volume coming in since the earnings report, these are shorts that are just, they want out of this stock. And if I go to like a 15-minute chart, you can see every time since the earnings report, every time it pulls back, it's bought up. Whoop, it pulls back here and it's bought up. Pulls back here and it's bought up. Pulls back here. It just keeps going higher. Pulls back here, bought. Pulls back here, bought. Pulls back. So it's just climbing higher. So every time it comes in a little bit, shorts are covering and driving it higher. This is a heavily shorted stock, and they want out of this thing. And you can see here on the weekly chart, straight up from the bottom. So, this is all the things that people are pointing out to me, like it's going to pull back and you got to be careful. And I get that, but I also want people in the leading stocks, and this is one of the leading stocks. So I think I made my point here. This is going to remain on my ready list for the rest of this week. I'm going to highlight this. I think it takes out the 72.98 in short order. I'm not saying this week, but as long as we're having this rally where I think the Nasdaq is going to make new highs, this thing's going to make new highs too. It's a leading stock. So this is where once again, I'm saying that leading stocks don't have to be making new highs. I think, 15% in a day. Thank you very much. 23% in 2 days this week. Yeah, I think that's a leading stock not making new highs. Speaking of which, another name on our ready list this today, and I left it on once again. Why? Because it's not really extended from that five. Now today it is. Today it is. Robinhood really moved a lot today, 9%, and it's 10% above that 5 EMA. So allow it to pull back. But once again, you got to look at how fast this 5 EMA is moving. It was $50 a few days ago, 52. Monday, it jumped up to 53.76 today. It's 56.70. So it doesn't need much of a pullback with that thing going up, $4 a day. To pull back to the five, find support and bounce. So these are the leading stocks. Once again, this did not make a new high, did it? No, but I think you'll agree that it's a leading stock and it's up 15% this week. I think we'll take that in 2 days every damn time. Yeah, so it's really important to identify the market direction. I think that's super important. And then to identify the leaders, and that's the key to success in an uptrend. If you have a sideways market or a downtrend, that's something different. But in an uptrend, this is where we excel, and this is where we make our big money, and this is where we step on the gas. And the next one I want to pull up is Palantir. And now people are going to say, yeah, this one did make a new high. And you can see why I put this one on the ready list. The cup with handle pattern. This is classic breakout stuff. To me, this is just getting going. I know it was up 8%. It's making a new high. It's down after hours, blah, blah, blah. I believe this breakout here from I don't know what I had my buy point at. It wasn't 125, was it? I think I had an early entry buy point. I looked last week, it was like 89. I had an 89 buy point. So we're doing pretty well. A couple people at MC Stock Charts pointed out to me and going like, man, my entry point for this thing is like below $90. So you're sitting pretty. And I can't find it right now. It doesn't matter. It doesn't matter. I just think that if it breaks out from this buy point there, call it 125. If it goes, 10% move, that's 137, 140. And if it's going to give us a, 20% move, I think you're looking at 150 here. Not tomorrow or next week, but, after it makes a run, it's going to have fits and starts, and it's not going to soar like a heavily shorted stock like Hims and Hers. But another one of these leaders that's on my ready list, and I'm trying to explain why. That one I think is pretty self-explanatory. RBRK. Now, I was, torn between CrowdStrike and RBRK, but I went with this one, and I've explained to you many times why I like it, because I think it's leaner and meaner, and now it's up to 16 billion. I think when I was showing you it was 10 or 11, and it just keeps going higher. So now it's a $16 billion stock. So to be a 10 bagger would be 160, which that's a stretch. But a five bagger, maybe, I don't know, 80 billion, or even from here, a two bagger would be 32. But originally when we looked at this, it was about 10. So a three bagger would be 30 billion. And I think we would take that. Obviously, it's going to take, some strong earnings reports. This is a high multiple, high valuation stock, no doubt about it. But broke out from the 76.11 standard buy point. Once again, maybe a 10 or a 20% move from there would be, $7 to $14. So maybe, I don't know, 84 to $90. I don't think you can expect much more than that. I'm gonna have to take this off because it's getting awfully extended. Not so much from the five, but from that base. It's getting away from its base here. So making new highs away from the base. And if you got this one, congratulations. I like this cybersecurity names. Rubik is, to me, one that I like. I have a CrowdStrike on my focus list, but I decided to go with Rubrik. I mean, I like them both. This one pulled back last week, gave us a little chance. Yeah, it's up 7% this week, and Rubrik's up 8%. So apples and oranges here, I guess. Apples, oranges, oranges, whatever. I like them both. I like a lot of the names in the cybersecurity. It's a Zscaler, just stepping on the gas here. This thing is just, yeah, it's like going down the freeway at 150 miles an hour. This is Palo Alto Networks. This one's still on a base. So this one could show up on a ready list sometime soon. we know in this group that they share or yeah, they switch leadership. So CrowdStrike and RBRK and Zscaler might be leader now, but it could be Palo Alto or Okta, next week or next month. So you always want to be watching this group. Okta looks strong as well. Anyway, I digress. Roblox, that's the next one on the ready list for this week. You can tell I wouldn't say excited. I'm encouraged by the market. It's we suffered a long time and now we're starting to reap the fruits of our labor. So that's always rewarding. Roblox is up 4.8% today. I know me and my friend had some calls in this one and it worked out from May 23rd, 75. And when it trades up that much, they paid off pretty well. But still, I would say this one, even though it's getting a little extended, yeah, I don't know if I could leave this one on the ready list. It's 5% above that five. But once again, that five's going up. You can see just a couple days ago it was 70, and today it's 73. So, tomorrow 74, 75. So a pullback to that five, yeah, that's going to be a tough one for me. I have to decide. Now, I put Bros on to today, and I was torn between. Well, I have a lot of stocks. I'll get to them in a minute. Bros and Uber. I picked Bros. And nothing wrong with Bros. I mean, you can tell that it broke above its downtrend line following its earnings report. Once again, this is like these delayed reactions to earnings, right? It had this big move, then kind of, had an inside day, then had a nice day yesterday, and today flat. But like I said, the institutions aren't going to buy every day. They might nibble here, come back next week, nibble again. You don't know when they're going to buy, but I just like this thing longer term, and I think you got to look at all time frames when you're buying a stock. And to me, I just put this one in my retirement account and just I'm going to set it, forget it. I think it's going to be something like Starbucks did. Robinhood as well. Robinhood and Dutch Bros, the same kind of a monthly pattern here. And I think this is like Charles Schwab in the 90s, and Bros is like Starbucks in the 90s. And that's my story, and I'm sticking to it. But we're not in the 90s anymore. We're in 2025. So Bros I put on. I'm going to stay with it. APH, I put this one on, and nobody's heard of this damn thing. I posted on Twitter. All I got were bots. Nobody responded. Like, what the hell is this thing? Well, this is an electronic parts stock that's up 6% this week. Broke out of the base. You could see why. I hope you can see why I put this on my ready list this week. It's earnings, going straight north. It's been consolidating within a base, trading tight within that base, pulling back to the five, and then it popped on Monday, then followed through today. This is not going to move like Hims and Hers or Robinhood or Palantir, but it's a nice. I like buying stocks, trading tight in bases. You know that, so I'm a sucker for that. So that's why I put that one on the ready list. But it is getting extended from its five, and once again, I have to take that one off. In fact, I think I did already. But still, it's on the ready list for the weekend. If it pulls back to that five, it's go time. GEV in the news today, and nice 4% move. Once again, trading tight here within the base. This one is actually closed right at the five on Friday, then bounced on Monday, followed through today 4%. So if you got that one, congratulations. You can see the consolidation here in a stage one basement. That's a thing of beauty. Yeah, I really like this one. I believe it's the leader of, there was a lot of these stocks that I wanted to put on, and I just selected this one because I want people in the leaders, and I hope you can appreciate that. I'm not going to put on 50 stocks on my focus list. I'm just not going to do it. So I limited it to about 10, and I think I just covered all 10 of them, did I not? Hims, Hood, Palantir, Roblox, Rubrik, Bros, APH, GEV. Oh, darn, I might have to cut this one loose. This one's pissing me off. Spotify traded down to its 21. I expected it to bounce, and it did bounce today. It looked good. Then I, had to go do a few things, and I came back and I said, this thing's flat on the session on a day like today. That's not a good sign. This is a late stage base here, so I'm a little concerned about Spotify. I know it was considered a one of these anti-tariff type defensive stocks, but man, I would expect it to bounce a little more than that. So I'm disappointed. I put that on my ready list and it did not deliver. Tesla, I had on the ready list. I was intrigued with this last week, put it on this week. As on Friday, it traded above its 200 uh, day 200 day line, 200 SMA or whatever. And now this week it gapped higher on Monday and followed through today, nearly 5%. So Tesla looks good. So what do you expect of this one? Well, from 300, 10% move would be 330, a 20% move would be 360, somewhere in between there. I'd be taking profits probably at 340, 350. And I'm talking partial. You want to let your winners run, but you also want to, take some profits, take some off the table and buy yourself or buy your loved one something nice and have something tangible, or put it in your kid's college fund or savings account or whatever. Put it away. So yeah, take profits and put it away in an account. So anyway, that is my ready list. Now I'm going to go through my focus list. And you guys, I was going to pick Uber, but I picked Bros instead, and Spotify. But this one had a nice move, 4%. This is another one that I expected to, well, you can see it traded tight within a base, pulled back to its five, and then on this is Friday, and then on Monday, nice bounce of 6%, today 4%. So nice move for Uber this week. 10, almost 11% move for Uber. You can see it's breaking out of this base. I've talked about this one a lot recently. Consolidation and then consolidation. And so people think, oh, it's going to just do this again and come back into that. I don't. I think it's got 100 in its sights. And a lot of stocks that go to 90, they follow through to 100. If you don't own Uber, I'm going to put this one on tomorrow, even though it's a little bit extended. 5.3% above the help me out here, the 5 EMA, which is, rising. You could see a couple days ago it was 83, 84, now 87. So it's rising every day. And it won't take much to get, back to 91. Anyway, that's why I have that one. I did show you Monday earlier, Mandy, and I think that one's still a buy. I'm going to put that one on tomorrow. I like that one a lot. SE, I showed you that one earlier, and I explained why. You just insurance, paying insurance, waiting for the data point. So you pay more and you miss out on some percentage. But if this one's going to break out and move, you're expecting a 10 to 20% move. You're looking at, 14 to, 15 to $30 move there. So maybe back to 160, 170, 180 for SEAC, the real meme. AXON, another one that was on my focus list. I didn't put it on. You can see why. It's just, trading tight within a base, pulled back to the five, So that's why I tell you, if you're looking at stocks, you're looking to buy a stock, find out where the five is. It's a leading stock there and it's pulling back. Probably going to find support there. I post leading stocks every day at the bottom of my page. So I hope you're looking at those. There is a reason why I post those during market rallies. CHWY, I like this one. You can see that it's trading tight within the base, except for whoops, what happened on Monday? It traded down to its 21, found support, but still, these last three closes there are just about exactly the same. 39.57, yesterday 39.48, today 39.49. That's trading tight within the base. So yeah, and the five is 39.03. Yeah, I like CHWY a lot, so that one should be showing up soon. But I don't want to put too many on. Carvana, kicking myself for not putting this one in Uber on. Trading tight within the base pullback here to its five, bounced. How much is that one up this week? 9.3%. So still the standard buy point's 290, 284. It's just a tick above it. I could put that one on. I don't know. Root. I'm not real thrilled about the insurance stocks, but this one is trading tight within a base, and it's right there at the five, man, 147.48. So this one intrigues me as well, and you can see why I have it on my focus list. Amer Sports, leisure product company, I believe they reported earnings when, 20th? When is the 20th? A week from today. But yeah, double bottom base here, and it's, blasting off the five here. If you're going to buy it for a trade, I don't want to hold that thing into earnings. I've seen too much carnage here during the earnings. CoreWeave is another one. I had it on last week. I got pissed off at these guys. They weren't happy with their IPO and they were seeking debt 1.9 billion debt deal, but it didn't follow through. So what happened on Monday? So that news came out Friday and drove the stock down big time, 6%. So nothing happened over the weekend. What happened? It's up 13% on Monday and 8% follow through today. So CoreWeave is up 23%. They report earnings tomorrow, so that I'll just wait for the earnings report. I do like the IPO. Look at that. 3 months. It's been up every month. What are they crying about? Up 53% this month. So yeah, I don't know why they're looking for a debt deal. But anyway, that's a nice IPO base. All right. And you can see why I like it. So anyway, I'm going to go through these. I mentioned the GEV and some of these construction data center names. Power or Quanta Services traded back to its five, consolidated, trading tight within a base and has popped this week. A nice move of 5.4%, not bad, right? Once again, these are slower moving stocks, dividend payers, and they're not going to move like Hims and Hers and Robinhood. This is Sterling Infrastructure. It's got a gap to fill there at 183, and it did that today, 187. Very nice. So, yeah, I like that one too. Sterling. The other one was BMI, another one that I had on my list, and you can see it's right near by the standard. Trading tight within the base, bounced off. I didn't put it on, so I go to sleep at night kicking myself like, why did I put on Spotify and not Badger Meter? I torture myself. And then, of course, I mentioned CrowdStrike earlier, but I chose Rubric because, one or the other. I don't want to put a bunch of the same names on there. And of course, Netflix, when it pulls back, I think that one's a buy. Also, Duolingo, definitely a leading stock. Yeah, just, this thing's traded, pulled back to its five on Monday. Thank you. But it was still up 1%. And then today blasted off that 2.6%, so only $13 move. This thing, man, what a beast. Duolingo, yeah. It's been a winner for a long, long time since the 2022 bear market. Yeah, it corrected like everything else during the, correction of February and March, but April hit. These guys are slamming on the gas. Yeah, it just formed this nice base, blasted higher, and yeah, it's a thing of beauty right there. Maybe I'll go to the monthly. Oh, I'm in love. All right. That's it for me. Thank you for watching at mcstockcharts.com. We never give up. Stay hungry, stay foolish, stay humble. In honor of the great Steve Jobs, I have one more thing. And that is tonight's earnings. Earnings season is winding down, and I just rejoice that earnings matter now, where before it was all about the Fed, it was all about tariffs, and now earnings really matter. To me, they always matter, but now they're actually being rewarded. And we're seeing that in some stock price action. This is Carmen, a company out of not Newport Beach, but Huntington Beach. Down in LA, yeah, defense, aerospace defense name. You can see the IPO looks pretty damn good. Not much of a move after hours there, 0.5%. I will have the full report in the morning here on the beat and the raise or whatever they did. But I was too busy today to even look at this stuff. NU reported. This is a Brazil-based foreign bank here. Double bottom base pattern, not moving much after hours. Brazil, I don't know, might report later. I don't know if they even reported yet. GRAL, I saw this one was up today and took a dump. If you are up 20% into a print, gosh, take some off the table. I mean, you can't leave this. So what happens? It goes up 20% during the session, comes down 14% after hours. So, just back to kind of where it was there. So this is probably some short covering into the print. And now I don't even know what they reported, but anyway, it's just a company that's losing money, and I'm not really interested in that kind of stuff. So anyway, GRAL. EXEL, I saw that one moving here. Yeah, 6%. The biotech has just been radioactive. Anything in biotech you cannot touch. XBI, there's too much going on here. This thing is in a complete downtrend. And I digress because EXEL was up after hours. Nice move here. So it's going to get back above its 50, up 6%. I'll have the full report in the morning. And the last one was OKLO. That's that Sam Altman thing, right? It's flat. I don't think they report till later on. I think it was 2 o'clock on the West Coast, 5 o'clock on the East Coast. They're going to report. So I'll have that in the morning as well. That's a nice looking base here. Yeah, not bad at all for OKLO. So we'll see what they say. That wouldn't surprise me if they it ripped higher there. Um, just based on that chart action. Looks like some short covering into the print today. Yeah, 21% short interest. So anyway, that's it for me. This time, I mean it. At mcstockcharts.com. We never give up. Thank you for watching.